Thanks so much for joining us, everybody. My name is Relentless on behalf of DeFi Raiders, here to talk with TN, the CEO of Pendle Finance. So we're going to be digging into everything about their protocol that they've been doing, that they're going to do, and all the benefits it has to the users. So again, thanks again for joining us today, TN, and Dan as well, for whenever you do decide to speak.
Thank you for having us.
Cool. Thanks for having us.
Yeah, of course. Do you guys want to go ahead and give a little background on yourself? Background on yourself, how you got here to founding PendleFi, and then what you do. Obviously, TN, you're the founder, and Dan, you're the lead of growth. But just kind of a background on yourselves and how you got to founding Pendle.
Yeah, sure. So I started out in crypto around like 2015 or 16 period, but only became professionally involved in the space in 2017 when I joined Kyber as a founding team member. So I was there until 2019, learned a ton, met a lot of smart people, and it was a very, very good decision looking back, because it pretty much shaped the entire trajectory of my crypto career. So fast forward, I left Kyber in 2019 and then started to explore different directions within crypto ecosystem. And eventually in 2020, during DeFi summer, it occurred to us that fixed rate product was just something that was missing, but was very essential in the space because we were seeing a lot of money flowing into crypto space. And there was just no way for users of any kind to lock in the rates. And comparatively, in conventional finance, fixed rate products are arguably the largest sector within the financial sector. And we think at that point in time, we thought that there was a lot of potential in this particular direction. And we decided to work on a fixed rate product solution to cater to our own needs, and hopefully the other users in the community would find useful. And that's how we came about with the idea to work on Pendle.
Okay, awesome, very cool. So let's get into Pendle then. Let's see. Hold on. I got like different notes, and I'm trying to type and do two things at once here. All right. So, yeah, if you want to, I'm not good at typing and talking. So if it ever sounds like there's a long pause, it's because I'm writing something down, and I'm terrible at doing both at the same time. Okay, so cool. Glad you got a lot of experience in the DeFi background, right? And your experience with Kyber. So you guys are looking for, a way to bring, kind of a TradFi fixed rate kind of thing to DeFi, and then that leads you to Pendle. So if you want to give us basically a breakdown of what Pendle itself is, right, before we start talking about everything you guys did with V2 and all the use cases and stuff like that, just kind of a quick TLDR of what Pendle is and what it does.
So fundamentally, Pendle is a yield trading protocol. It is actually a relatively complex derivative product, but to put it simply, right, it is a protocol it's a venue for users to purchase assets at a discount.
Okay. All right. So purchase assets at a discount, right? And then we'll just kind of talk through just some of the mechanics. I think that's kind of the easier way, because like you said, this is a complex protocol, right? I first found out about this a little while ago. Rec Diomedes started tweeting about V2, and I had known a little bit about Pendle before, but then I start kind of like digging into it. I'm like, all right, it makes sense, but it's super complex. So I guess the best way to do this is to kind of break down those mechanics, right? So like you said, it's a protocol for what you said, and then it goes. So you buy it at a discounted price, right? And then you lock it in, let it fully mature for 6 months. So how does this all work, right? So it separates the yield from the asset and allows you to trade both separately. That's like step one, right?
Yes. So I think an easier way to understand this whole like yield bearing concept is to understand the yield itself. And I think in crypto, right, in many ways, like users could generate yield by depositing assets into. Sorry. Okay, yeah. So users can generate yield by depositing assets into DeFi venues. So they can lend out, they can deposit into a liquidity pool, or they can just put it into a vault and then provide it for a strategy to take place. So all of this deposit generate yield. Now, so in return, right, these in participation of these protocols, the users who deposited the asset into the protocol will get something called yield-bearing asset. So the holding of this effectively achieves two things. One is it functions as a proof of deposit into the protocol. And secondly, the yield-bearing asset also serves as a form of certificate to entitle user to the yield um, the protocol would pay out in the future. So what Pendle does is to split up these two components and represent them in two different tokens. One is principal token, the other one is yield token. So by splitting them up, like these two parts can be traded independently. So effectively, I think the easier way to think about the outcome is that aside, like number one is because of the splitting of the yield from the underlying, now there is a principal token which is equivalent to a zero coupon bond, right? So you purchase the asset at a discount, and then at expiry you can redeem it for the underlying in 1-to-1. And then on the other hand, the other outcome is that by splitting the yield from the yield bearing asset, we effectively allow users to speculate on the yield. So users can sell it, or someone else can purchase the yield token in order to, if like again, like if they believe that the yield of a certain position has the potential to grow, then they should be purchasing it. And doing so through Pendle is much more capital efficient. And this is really one of the bigger propositions that we offer to traders. So yeah, simply put, I think we cater to retail users to purchase asset at a discount. And then on the other hand, the more advanced and sophisticated traders can execute strategies and capitalize on yield opportunities.
Okay, yeah, awesome. And yeah, and that's kind of, and you've simplified it too here in a way that you have it for professional traders or kind of the end user, or just like your basic retail user. So like you said, this is super complex, but as I'm looking through here on the dashboard, right, it's got a simple and an advanced or pro form thing to kind of make this make sense to everyone. All right, so you guys launched this after having V1 up for a certain period of time, right? And then V2 has been pretty successful so far if you just look at the charts here, right? So ever since kind of shortly after your launch, you've gone from 5.8 million in total value locked to over 13.87. So what are the problems that you guys identified during while V1 was up that you've implemented in V2 that you think are really have made a humongous difference in the performance of this and the attractiveness of this project?
Yeah, so I think a couple of things. The first is that in terms of AMM and liquidity provision, V2 is significantly better than the V1 implementation. So as an example, right, because Pendle splits a yield-bearing asset into the principal token and yield token, so effectively in the V1 implementation, there needs to be pools, right? A pool for principal token and a pool for yield token. And these pools are hosted on two different assets. It's just like if you think about it as an analogy, right? If you want to buy, let's say if you want to make a salad, you go to, like typically you go to a supermarket, you purchase the vegetable and you purchase the dressing. But in the case of what V1 was, it was like the two main ingredients of a salad can only be purchased in two different venues. So from a user perspective, it's actually less than optimal experience because users would have to go to venue A to purchase one component or provide liquidity for one component, and then go to venue B to provide liquidity or purchase the other asset, right? But in the V2 implementation, we were able to consolidate the pools such that everything takes place within the Pendle ecosystem. So the upside for this is that we are able to capture all the value and the traits that the value that the value that the traits against the pools, and it's a much better user experience because users now can just focus on a single venue instead of going to two different venues to try like to gain different exposure. And then secondly, the challenges, I think one of the other challenges that we encountered in the previous implementation is just the number of assets that we could list. Because when we started out, there were a lot of unknowns and we had relatively strained resources. And this was during bull run. So a number of different protocols approached us and requested for us to support their yield-bearing assets. But because of limited time and resources, we couldn't support as many assets as we wanted. And in the V2 implementation, one of the main changes that we introduce is to make the protocol permissionless. Now, what that means is that the eventual objective of Pendle is to allow users to set up pools without having to reach out to the protocol, right? Without having to reach out to the team at Pendle. Effectively, the experience is going to be like setting up a pool on Uniswap. So today you want to set up a pool on Uniswap, you have the token, pair it against another token, and then there you go. That's the start of the pool. You just have to see the liquidity of the two assets in the pool. So in the same way, Pendle can achieve that by enabling all the different types of yield-bearing assets, whether it's AMM LP tokens or Vault LP tokens or money market LP tokens, and all these tokens can be tokenized and split into yield-bearing asset, yield tokens and principal tokens. Um, so making it permissionless allows great scaling potential. So from a scaling standpoint, this is where we think it would make a lot of difference between us and some other competing products in the space. And of course, like the third aspect that we improved on is the user experience. So one of the most consistent feedback that we've gotten with V1 is that the interface was intimidating and it could be quite overwhelming and difficult to navigate. So with V2, we introduced simple UI and pro UI to cater to a wider range of audience. So in simple UI, you don't actually have to have the derivative knowledge. You can access the protocol by clicking a few buttons, and in 3 steps, you could either purchase principal token or provide liquidity into the pool. And the outcome is the same as if you participate in the Pro UI. Now, the Pro UI is really for more customization. It's really for the more advanced traders. So yeah, in short, like these are the three main ideas that we've incorporated in V2 implementation. And yeah, we're seeing pretty promising traction so far because of these changes.
Yeah, awesome. And that's kind of that's cool because that's really what I have notes on here. Was the major changes that you made that really will bring a lot of people to you. And this is kind of in line with what a lot of people have been talking about recently. The things that I noticed were your user experience, your capital efficiency, your minimum, and permanent loss for LPs. You guys have improved your slippage on trades, and then leading into that whole concentrated liquidity concept. So I mean, you guys have taken a good product and implemented a lot of major changes that will do exactly those things that you guys do exactly those things that you were just talking about. Um, Okay, awesome. So let's talk about. So now that we understand kind of what Pendle is, the changes you made from V1 to V2, let's talk about what the benefits are from the end user's viewpoint, right? So, we say that, hey, this is kind of a complex thing, right? But the whole point of, you guys build a complex project so that it can simplify it on the other end for the end user, right? So that they have an opportunity to make money. You've already done the work. All right, but what does this all mean to them, and how do they make money on here, right? And then, let's kind of do a walkthrough of the project from their perspective.
Yeah, sure. So I think we can approach this from the perspective of a retail user because I think that's a lot easier to understand.
Yeah,
So
100%.
yeah, the most straightforward way that I think a user can benefit from participating in the Pendle protocol is by providing liquidity into the existing pools of any kind. So I mean, fundamentally, Pendle is the source of liquidity for Pendle is yield-bearing asset. So, for example, if the user already has STETH and STETH, like by providing liquidity into the STETH pool within Pendle, the user is entitled to even more yield on top of what he or she is entitled to just by depositing ETH into the Lido to acquire stake ETH, right? So it's really leveraging on the composability feature of crypto DeFi to allow users to maximize gains. Now, in this case, for liquidity provision, we've made pretty significant improvement to the overall design of the liquidity like provision feature. So impermanent loss has always been one of the more significant concerns for liquidity providers because it's a cost, right? Like when you like there's always a possibility where you deposit assets and at some point in time further down you withdraw the asset, you might withdraw less than what you anticipate because of changes in prices and movement of asset prices. So, but typically with the case of Pendle pool, the two assets that are paired within the pool are very closely related. Now that means because they are so closely related, right? They move in tandem and their price movement is actually parallel. So because they're moving in the same direction instead of diverging away from each other, the impermanent loss is relatively insignificant. Now, as an example, right? If you would imagine that the impermanent loss for DAI and USDC pool to be quite minimal because both of these are stable coins and they move relatively. I mean, they cannot deviate too much from each other. The other example is STETH against ETH, right? Because of their strong correlationship between each other, the price movement of these two assets will be quite parallel. So in the same way, Pendle AMM is designed such that the two assets within the same pool are very, very correlated. So it's actually principal token of an asset against the underlying asset itself, like just the underlying asset, right? So because they're so correlated, the impermanent loss is relatively insignificant. So from the user perspective, given that the impermanent loss consideration is negligible now, it makes a lot of sense for users to deposit asset into the pool for additional yield. Why stop at Convex when you can use the LP of Convex to deposit into Pendle to gain more yield exposure, right? So this is the easiest way that I think a user can participate in the protocol. Secondly, it's to purchase assets at a discount. This is also one of the bigger narratives that we are promoting with the launch of V2 because we think that there is a lot of potential for user to gain yield exposure, fixed yield exposure, just by purchasing the principal token because it is a zero coupon bond and the yield is fixed at the point of purchase, right? So for example, today ETH can be priced at can be trading at like 5% discount relative to the spot price, but it will expire in a month time. So this is a relatively good opportunity for user to undertake. if the user is comfortable with with the rate itself. So this is also a very straightforward way for users to participate in the protocol. And of course, like the last one is more complex. It involves like relatively deep understanding of the protocol and yield strategies, because of the strong correlation between a principal token and a yield token. Whenever principal token sees surge or drop in demand, there will also be another implication on the yield token itself. So when there are movements with the principal token, there could potentially be yield opportunities for YT. So this requires a more extensive discussion, but I think I'll spare the details and would refer the listeners to check out the documentations to understand a bit more how this strategy works.
Yeah, and I think they'll also have to like get, for that type of strategy, right? They're gonna have to get on and like see it in action too. So do you, and for that, do you guys have like videos or anything on your website that kind of walk through everything that I could?
Mm. We've had strategies. So we have one of my co-founders, Fu. He's written a strategy to highlight how a user benefited drastically from a very opportunistic trade
Oh,
of
is that
the.
the tweet that's on your main page on Twitter?
Yeah.
Oh yeah, that's actually, yeah, I've read that a few times actually. Yeah, I'm gonna include that in kind of a write up after this. So,
Yeah,
um,
yeah. That's one strategy. Yeah.
okay, cool. All right. So yeah, so we'll let me get back to my notes here just to make sure. All right, so I want to talk through this, right, in a couple, different scenarios, just so that, we can kind of make sense of a couple of these things, and just a couple questions will be from like a very entry level perspective, right, and then up to, more of a higher level perspective. Just kind of throw a couple scenarios at you so you can break them down to make sense to the lowest level learner. Um, so when someone comes to Pendle and they see, okay, I can, buy this ETH at a lower APR or a lower, entry point, right? So I buy it at a discount, right? I can buy it for now at a 2% discount. In 189 days, I'll get this yield up front in a separate token, and then in 189 days, I'll get my underlying asset back. All right. So what's the mechanics that are happening there to ensure, what do you tell that end user? Hey, yes, I'm going to give you this money now, but you're also going to be able to get your full deposit later. What are the mechanics happening behind the scenes to ensure them that they'll be able to get that value?
Right. So effectively, I think with the splitting of the yield from a yield-bearing asset, you are actually taking away the revenue generating component of an asset. So if the asset is not generating revenue, then with time consideration, right? It cannot it will have to be sold at a discount, because, for example, if you expect an asset to generate $10 in a year's time, you shouldn't be paying more than $10 for this particular asset, right? Because it just doesn't make sense for you to pay, let's say, $15 today only to get $10 in a year's time. What would make sense is you would only pay, let's say, $5, and then you have $5 of room or buffer to gain by waiting out for a year. So in the same way, when we split the yield bearing assets from into yield token and principal token, we are effectively splitting up the revenue generating component and the principal component, right? So
Mm-hmm.
yeah, when you purchase the principal token, you are purchasing at a discount because the asset itself will not generate any revenue. Sorry, the principal token itself does not accrue yield from the underlying protocol, and that's why it has to be sold at a discount. And at expiry, because with time, it will actually appreciate to be on par with the underlying token. So at expiry, you could exchange it one to one with for the underlying. So as an example, right, it would be you purchasing USDC at 95 cents today, right? So you purchase 95 cents today, you wait out for example, 2 months, and in 2 months' time, you could redeem $1 worth of USDC. So you actually gain 5 cents to a dollar.
Yeah, right. Makes perfect sense. But I guess more my question is, how are you guys, building that, that that volume or that TVL or that value
Mm.
as a project to be able to pay those yields out and guarantee all that money back?
Right. So we don't actually guarantee. I mean, the yield is guaranteed not by us, but by the underlying protocol. And a lot of it is also because of market movement. So for example, the discount is purely dictated by the demand and supply forces. So for example, if someone purchases the yield token, it's going to drive the price of yield token upward. And that means better discount for the principal token. So these kind of relationships between the principal token and yield token actually determines the price. Now, in terms of the TVL, I think when there is a significant amount or a decent amount of trading activity that happens on the protocol, then the APY becomes more attractive. And with better APY, liquidity providers would naturally gravitate to the pool because it's a more productive use of the asset. So as a result of that, if everything works as expected, this should be the virtual cycle that we should expect. Now, of course, in order to acquire more liquidity, we also encourage more deposits by offering liquidity incentive in the form of Pendle, and that is yeah, just part of the liquidity incentive program that we have on the protocol. And on top of that, we also are in discussions with some of our existing investors to contribute some liquidity to the pools.
Fantastic. All right, cool. Yeah, thanks. I appreciate you, answering some of those. I know that some of those questions might seem super simple, but obviously, I want to make sure that anyone who's listening to this, whether they're day one or a seasoned veteran, right, who's been in the market like you for 6 years, is able to understand kind of the benefits at a low level, right, so that they don't get scared away from a complex set of from a
Mm-hmm.
complex system, but that is also meant to be simple enough for everyone else. Um, all right, cool. All right, so we got a great understanding of how the pools work, how the discounts work, how the money is earned, right? Things like that. Um, so let's talk a little bit about um, so kind of your rewards, right? So the boosted APY. Right. So I guess this is kind of a twofold question. One, we'll have to talk about the power of VE Pendle, right? The benefits of users locking their Pendle and how that feeds into the APY. And then I also want to talk about your current reward system and like future plans with the reward. So yes, I guess it makes sense more to talk about um, your probably the VE Pendle first, and then how that feeds into
Mm.
the rewards.
Yeah, sure. So VE Pendle is inspired by VE Curve. And there are it's actually a lot of similarities with the VE curve. So at a basic level, VE Pendle entitles users to boosted reward. So user lock up the pendle between say 1 week and 2 years. So the longer the lockup duration, the better the multiplier, up to 2.5 times the base APY, right? So this is the first proposition. The second proposition is that users or holders of vPendle could channel incentives to the pools that they desire. Because think about it, every week there is a fixed amount of budget that can be used to reward liquidity providers. And because the reward is limited, then the voters could decide how to best funnel the incentive to the pools that they think would make sense for them and the protocol. So this is another proposition. So in a way, like we think that this is an important feature because this is this is effectively an alignment of interest between the users and the protocol. And third, it's an amendment or modification that we're introducing to our version of VE that differs us from the other VE implementation. And that is voters are also entitled to protocol fees that the protocol accrues, right? Because we want users to vote. And in order for users to vote, we also created an incentive mechanism to basically just encourage more users to vote. So when they vote, they are entitled to a portion of the fee that the pool that they are voting for accrues. So this is, I think, at a very high level, the main propositions of VE Pendle. As to the reward, um, I think the way to look at it is that VE Pendle is a new implementation that comes with Pendle V2. So before this, there wasn't actually any utility to Pendle. And with the V2 implementation, we just think that it's important for us to introduce more utility to the protocol token, and that's why like VE Pendle is there. And we are launching it with very simple voting and governance component so that holders of the tokens could decide on some aspects of the protocol, like in this case, incentives, right? Further down, there is a potential for us to make allow more flexibility and voting power to user, but this is something for us, yeah, to be observed. And generally speaking, the reward is in terms of emissions, right? It's de- it's decreasing on a weekly basis. We started out with some amount, and then over time, every week we decrease the amount by a percent. And after 5 years, it should go into a terminal inflation rate of 2%. So at least for now, that's how we're thinking about it. But of course, further down, if the community thinks otherwise, we can always explore a proposal and see how we can go about that.
Yeah, very nice. So a quick question about the VE Pendle, right? So what would be your target, right? So obviously this is an inflationary token. Obviously you have a fixed rate of how much you would like it to be inflationary per year that you're working towards. What is the total amount that you guys percentage wise would like to see locked, or that you would hope to incentivize becoming locked?
Yeah, so I think it's a very difficult question. I mean, the short answer is as much as possible because
Yeah.
that would mean that our VE program is successful. But I'd say like to begin with, 10-20% would be a good start, and then over time we try to increase the number from there.
Yeah, agreed. Yeah, I think most of the modeling you've seen is people are really shooting for that 20% mark. Um, Obviously, because you want as many people locked into and supporting the project as possible.
Mhm.
So, and then kind of once people lock the VE Pendle, right? You guys, I mean, you have some pretty good boosted rates here, right? So let's go back to your pools here. Um, right. So your ape pool, right? The zero fee
Mm.
compounder, that's got like 130% possible boost. All right. So how much does a user have to lock in V Pendle to earn that full boost?
To earn the full boost, I think the simplest way is to maximize the amount of Pendle in holdings to 2 years of lockup duration. So that should entitle the user to the maximum amount of multiplier there. So it's the options are between a week and 2 years. So it's yeah, the multiplier that differs, and we want to encourage longer term lockup. So that's why 2 years 2 years lockup duration entitles users to 2.5 times multiplier.
Oh,
Yeah,
okay. So it's all
but again,
duration of
I feel
lockup.
like yeah, it depends on the amount of VE pendle that you have. The longer you lock up, the more VE pendle you're entitled to. If you want the exact number for how much you need to lock up to for maximum boost, I think we have that function in our calculator in the app. You just can go ahead and try based on the
Okay.
amount of liquidity that they have and how much VE pendle they need to max boost the rewards.
Yeah. Okay. Yeah. Because I
Or
realized I figured there was an amount of V Pendle you had to have plus a time period. Um,
For sure. Yeah, you can check out the exact numbers in our docs as well. If you want to do the calculation yourself based on your liquidity size and your V pendle amount.
yeah. Okay. Perfect. Oh, I must have. I guess I. Okay, I did kind of look at that. I guess I for some reason I thought I looked over this in the docs, which is like why I was asking, because I don't like to ask you too many questions that are laid out plain and simple in the docs. Um,
Or
okay.
sometimes things are more embedded in the docs. It might be good
Yeah.
for you to just ask
Yeah.
away and shed a
Yeah.
light into those information.
Yeah. Exactly. Yeah, because I seen the protocol fees and the incentive channeling and all that, and I do see that you have your decay time and all that stuff in here. Um, okay, sorry about that, but either way,
No worries.
cool. But it makes sense though, for people to understand that there are the old boosted pool models, which is like lock it for 2 years and you'll earn this additional APR, but you guys kind of have like, yes, we want to incentivize you for a time period, but also we want to incentivize you for the amount that you lock up. So it's a good mix. Um, yeah, I'm just trying to make sure I understand this, this protocol at all the different levels, because like you said at the very beginning, I mean, it is complex, um, but it's like good complex. So I got a couple different scenarios. I want to run by just kind of like strategies, so that you can, arguments that I've seen against it, or things that I've seen before, right? So, for example, so as a right, using your project offers its own benefits, but then someone could come and argue, so why would someone buy ApeCoin with a 50% discount with a maturity of 6 months when you could just take the collateral, long the ApeCoin perp for 6 months, and earn a significant amount in funding fees, all right, and stay liquid all the time? What's your argument against that?
So 50% discount is pretty much a guaranteed fixed rate. You can leverage your ApeCoin and farm it somewhere, but the yield that you're getting is not guaranteed. They fluctuate and they can go up and they can go down. Whereas the yield that you're getting from buying ApeCoin at a discount, for example, 50%, um, translate that into fixed yield, that's 100% yield because you're buying at half price. So you pretty much double your amount within that period to maturity. So that yield that you're getting by buying ApeCoin at a discount is fixed. So you are pretty much de-risking yourself away from yield fluctuation if you buy ApeCoin at a discount with us.
Okay, so you take the yield fluctuation risk out, and you pretty much just have the price risk and then smart contract risk.
For sure, yeah.
Okay.
And even then, if you're a more sophisticated trader, I mean, just going down a little rabbit hole a little bit here,
Yeah.
as Tian mentioned, like our co-founder Vu did tweet about this strategy a while ago. And if you want to de-risk yourself away from price risk, you can actually take, you can short perp funding, 8-point perps on centralized exchanges, and long the fixed yield on Pendle by buying the discounted 8 coin. With that, you're just earning pure yield while de-risking yourself from both the yield fluctuations and the price risk. So,
Yeah.
for more sophisticated traders, there are way more strategies that you can, play around with to get, pretty into interesting positions with, low price risk and, no yield fluctuation risk.
Yeah. Yeah, absolutely. And that's what I watched. I've seen a couple different like videos on the stuff that you did, and Steven, the calculator guy from DeFi Dojo, did like a 15-minute walkthrough talking about some of the more advanced strategies that are possible.
Oh yeah, that was kind of him to make the video.
So yeah, I know. It's great for me too, right? Like learning from that dude is one of the being in DeFi Dojo is one of the best investments I've ever made, to be honest with you. Just the amount that I'm able to learn from there. And that's, I learned a ton about your project just from the conversations that were going on in there leading up to V2. And then, so one other thing that I wanted to do you guys, I don't know if you guys talk about it, just the, kind of a next level up from the base user, but also an opportunity for users, right? Is how they can use Aave to like maximize, right? So say they want to, deposit their, you know, buy ETH from you at a discounted rate, deposit it into Aave, borrow it against it, kind of loop it that way, bring it back into the project. Have you guys, individually done any modeling there about how like, things like that can boost yield and present opportunities?
It is something that we can potentially do. So in V1, we had a Rari pool for us where okay, so just back to your question, buying ETH at a discount and then leverage it on Aave, that's currently not possible for us right now because what you're purchasing is actually the PT, the principal token of the ETH. So buying that, so PT is not supported on money markets. But down
Makes
the
sense.
line, if money market supports PT, yeah, it's definitely an interesting strategy to explore where you can leverage your exposure onto fixed yield. Then that's pretty much leverage exposure of a guaranteed yield. And yeah, definitely something for us to explore. But we haven't really looked into protocol supporting that yet.
Yeah, no worries. It was just something that kind of popped in my head. I didn't think it was supportive with the principal token. I just wanted to see if you guys had kind of thought about your ability to maybe be able to maximize that leverage later.
Yeah, for
All
sure.
right.
Interesting. Interesting. It would allow for a lot of interesting strategies, I feel.
Yeah, and I think you'll find some communities that would be, oh, I could get an extra percent here or half a percent here, and that would, open up a lot more opportunities in the future as well. Obviously, I know you guys got a lot to focus on now. It's just kind of something that went through my head. And then, okay, cool. So I think I have a pretty good understanding of, how the how your platform works, what it means, as someone comes on, looks through kind of the simple versus pro, what they can really do to benefit from the project. So then my really other question that I have is kind of what are your plans for expansion, right? So do you plan to stay on ETH mainnet? Or are you looking at, moving to something like Arbitrum or, doing some of these cross chain things where, fees will come down and other things like that? Or are you just solely focused on mainnet right now?
So at this moment, we are focusing primarily on ETH mainnet, but we're also on the lookout for opportunities beyond Ethereum. Case in point, we're seeing pretty promising traction on Polygon and Arbitrum, and we want to keep our minds open and continue to observe whether it makes sense for us to venture beyond Ethereum in the near term. Ultimately, we are a yield. I mean, our source of liquidity is yield-bearing asset, and that means we are a second-degree derivative. So it would only make sense to have a protocol like Pendle when the primitives on a DeFi ecosystem is already established, right? For example, AMM, money market, and the vaults have to already be somewhat established with decent TVL before it would make sense for something like Pendle to take place. So I think at this point in time, given the market activity level that we're seeing across the board, there aren't that many candidates that we can consider, but Polygon and Arbitrum and potentially a few others are likely candidates that we will continue to observe.
Yeah, very cool.
Just to add on to that point, our regarding cross chain part, our protocol is we've built our protocol
with being cross-chain in mind. So our VE Pendle is cross-chain compatible, and we've integrated ourselves with layer zero to bring our VE Pendle system across chain. So even the tokenomics and the product can exist in multiple chain and it will work just fine.
Cool. Yeah, I mean, I think you guys are, you got an open mind to it, but you're doing, you're building off where you can be successful currently and keeping your eyes open. I that's smart. It's good to understand the reasoning behind why you guys are built on ETH, right? And what you kind of need to be successful already, so that that helps others, kind of think about the opportunities that you might be able to provide in the future on other chains, and what to keep an eye out for. So cool. Yeah. So I mean, that really, for me, kind of covers all my questions, and what I wanted to kind of get to the bottom of and try to make this make sense for not just everybody else, but for myself too, because I trust me, I never assume that I'm the smartest person in the room. I generally am not. So it's an opportunity to learn from you guys and break this stuff down. But with that, is there anything that we didn't cover that you think that people really need to know about Pendle V2 and all the things that you offer that you'd like to talk about before we wrap it up?
I'd suggest our listeners here to really check out the application, because I think the application is a unique opportunity for users of any kind, with or without interest rates or derivative background, to get some exposure in a space that has constantly been quite elusive to most of us. We've utilized DeFi technologies to democratize the access to a product like this, so that the wealth generating avenue is not just exclusive to some other users, but also open to people of different kind of background.
All right, fantastic. Well, we have a few more minutes here. I don't know if you've got time, if anybody in the audience wants to raise their hand and ask any questions before we wrap it up. Give you a minute. I'm not sure that they always do, but what's next on the roadmap for you guys short term?
Well, I think there are different fronts. From the product perspective, we will continue to iterate the product by gathering feedback from users, and then implement some changes, and then observe and measure again, see, and continue the process indefinitely, right? And then on the business development front, I think this is also a very critical time for us to build up relationships with partners and other protocols that we think can be synergistic to the growth of both of our protocols. So, for example, I think one of the more important things that we want to focus on is to increase more integrations, because I think in this space, right, it helps to leverage on some other communities, to tap into communities that we don't have access to, and we want to be able to allow or improve our outreach through partnership and integration with third-party aggregators. So, for example, um, getting ourselves integrated into aggregators like, say, Exponential or some other PT distributors. Those are things in the roadmap, and something that we want to continue to invest time and resources into.
Yeah, very cool. I mean, you guys, that's a great outlook or a great mindset that you guys have. You're thinking on multiple different fronts, about how you can build, and not just on what you can pour into the project, but what other opportunities that are out there that you guys can latch onto and benefit from. So it's good to hear projects that have a good business sense, and then also are able to focus on building and kind of doing all the little things all at once. So. Very cool. It's been awesome to hear from you guys and hear all the things you're doing and that you got planned. So I'm excited. I'm excited to see this continue. I'm excited to get in here and really mess around on Pendle and see some of the opportunities. And I just want to say thanks again so much for your time for joining us.
Thank you. Thank you for having us.
Thanks
We
for
will continue. Yeah, we will continue to share more alpha in our Twitter and Discord server. So yeah, keep a lookout.
Yeah, we'll do. All right. You heard them, everybody. Tune into their socials, hop in their Discord and their Twitter to stay up to date and get the latest alpha. And thanks so much for joining us, everyone. It's been a blast being able to talk to the CEO here for Pendle, a really big brain project with a lot of opportunity. So dig in and get familiar and get in their Discord and ask any questions. And thanks again, everyone, for joining us, and we'll see you next time.